These stocks are moving lower, and we're going to talk about why. And just as a quick, broad scope for why the Chinese stock market has been falling at a much faster pace than the U.S. and most regions across the globe, China's had a real tough time, or relatively speaking, a tougher time than the U.S. and other regions at rebounding from the initial shock to the pandemic. There was the pandemic crash across almost every stock market in the world, the bounce back, which China did witness. But a lot of that bounce back in the US and China and everywhere was not only that, technology might actually, a silver lining of the pandemic, technology stocks and certain companies might do even better from people being, online more and being outside less. But it was also future growth as well. That this pandemic is obviously awful for so many reasons in the start of 2020. But, certain companies might not be hampered by this, and there might be even greater growth in 21 and 22 and 23, where we find ourselves now. And China just hasn't seen that. The numbers have not been coming in GDP wise, trade balance wise, and everything else to support what we had thought after that, like I say, initial crash at the onset of the pandemic, the bounce back there, and you'll see here in a second just how poorly Chinese stocks have been performing. The numbers haven't been supporting that bounce back, I guess I would say, for a number of different reasons that range from regulatory issues that they might have, their government obviously a lot more harsh on how business functions and what can be, shipped off to different countries and everything else, and potential conflict with the U.S. Those headlines and those fears maybe can get stirred up a little bit too much. We could be a little bit hyperbolic on some of the more political news sites, but you are seeing the price action reflect more reluctancy, more hesitancy to buy Chinese stocks relative to the U.S. And I think that not only is it that lack of economic data that they wanted to see in 2020 that they haven't seen in the last 2 years there in China, but also the very real fear that there might be continued strife between the U.S. and China that could hamper business there significantly. And I mean, you see that Chinese stocks are down 6% year to date, which isn't a big number, but when you factor that into the fact that the S&P is up 10% year to date and NASDAQ is up over 25% year to date, and the financial sector of the U.S., which is easily the worst performing sector of the year so far. They've got the banking crisis going on that everybody is tapped into. And the Chinese stock market is performing worse than that U.S. financial sector here in 2023. It's been a really rough ride for all those reasons that we've highlighted here, and widening out that scope a little bit more. You can see that, and this really, apparently I'm not looking close enough at the global stock market landscape, because I didn't know that the Chinese stock market had not posted a positive return from the pandemic's lows. They're down 20% from the lows of the initial pandemic crash that we saw. And you can see that they witnessed that similar bounce back that the U.S. stock market saw throughout the rest of 2020, as, a potential for, say, an Alibaba might actually be greater with more people at home and online and everything else. And they've given all of that away and then some. And even with the inflation fears and some of the stuff that's kicked in 2021 and 2022, that's brought the NASDAQ and the S&P 500 and US based stock markets lower than those highs that we saw in 2020 and 2021, the early part of 21. They're still positive relative to the lowest points of that pandemic initial outflow of funds there in the early part of 2020, down 20% relative to those initial pandemic lows. That was a little bit crazy to me. And then I was like, well, let's widen the scope out a little bit further and just see where we're at with the Chinese stock market for the last decade. And since 2010, China's down 30% in the same time that NASDAQ has expanded sixfold. And this, really creates, I think, an interesting story where if you're so U.S. centric, like I guess I have been, at least in the equity world, obviously, we do a lot of interest rate talk and foreign exchange talk here, where we rope in all of the, Asian, European, every different major region across the globe. And I hadn't noticed that there was such a wide gap here in the same time that our NASDAQ and our S&P obviously not performing as well as the NASDAQ. The tech stocks have really, really done well over the last decade, but S&P has to be up at least a few hundred percentage points. NASDAQ up over 600%. And Chinese stocks can't even post a positive return here, a really, really wide gap. That you wonder if that gap can close or if China can even get back to its long-term average. It's funny, we so often talk about the stock market not being a mean reverting asset. Interest rates, stock volatility, and foreign exchange currencies historically have more of a tendency to mean revert. And what we mean by that is the average, for example, the average exchange rate between the euro and the US dollar for the last decade or so is around $1.25, $1.20. And we've seen prices up to 150. We've seen prices down to last year just below parity, just below $1, but inevitably coming back to that long-term average. And you try to commit a mean reverting theory to the S&P 500, for example, and you look at it 10 years ago, you look at it 20 years ago, 30 years ago, and each increment of time, the S&P 500 is usually higher. And so you don't have mean reversion there in the stock world. Usually stocks tend to go up over time. Hasn't been the case here for the Chinese stock market, as FXI, which is one of the most popularly traded stock ETFs incorporating Chinese stocks, since its inception in the mid-aughts, the average price has been $37.50, and now trading under $30. It'll be interesting to see if this can get to even that average price of $37.50, let alone reflect the gains that a NASDAQ or a US-based stock index has seen over the years here. So recently, Chinese stocks not doing so well because of the prolonged pandemic that they've had over there, and potential strife with the US growing in recent months, and potential problems around their governance and how strict regulatorily they'll be on Chinese-based companies. And we'll see if they can get back to that long-term average or close the gap against US stocks.